Hey everybody, I made this really cool RV loan calculator. The link's in the description and it's free, so check it out. Hey, it's Kevin with Interstate Explorers, and in today's video, we're going to be talking all about RV loans. We're going to talk terms, we're going to talk important factors, and then we're going to run some sample numbers as well. Make sure you stick around for the end of this video when we talk about some tips to lower your monthly payment on your loan. Now, if you're watching this video and you've never done an RV loan before, what you're going to find is that it's kind of a blend between a car loan and a home loan. And we're going to get into the similarities and differences on that later, but first thing we're going to talk about is some terms, so let's go dive into that.
The first term that we're going to talk about is loan. A loan is a financial arrangement where one party, typically called a lender, will provide a sum of money or assets to another party, typically called the borrower. This borrower agrees to repay the borrowed money over a set amount of time, often with added interest or fees. Loans are commonly used for various purposes, such as purchasing homes, cars, funding businesses, or in the purposes of this video, an RV. Now we're going to talk about some people that are going to be involved in the loan process. And first up is the lender, which is the party, typically a bank, that finances the loan. The next term is borrower, which is also sometimes called the buyer. In either case, this is you, the person looking to take out a loan. And our next term is dealer. The dealer is where you are buying the RV from. Sometimes the dealer and lender can be the same person or institution. Next up is manufacturer. This is the company that designed and created the RV. They are not involved with the purchase or the purchase process of the RV. And now we're going to move on to some common terms and definitions. First up is MSRP. MSRP stands for Manufacturer's Suggested Retail Price, which is the price recommended by the manufacturer for a product, typically a vehicle, or in this case an RV, before any discounts, taxes, or additional fees. MSRP serves as a baseline for pricing and helps consumers and dealers understand the manufacturer's suggested value of a product. Our next term is RV purchase price. This is the agreed upon price between the buyer and the dealer. This price is largely influenced by the MSRP, but can be higher or lower depending on several factors. The RV dealer may have extra motivation to sell the RV and may offer you a price below the MSRP. You may also have an RV to trade in, which could lower the purchase price or raise the purchase price if you owe money on that trade-in. Other things that may raise the purchase price is where the RV is coming from. If the dealer had to pay substantial shipping costs to get that RV, that's going to increase the price. And other items such as taxes, any other fees, or any agreed upon additional features will also raise the purchase price above MSRP. And our next term is down payment. A down payment is an initial sum of money paid upfront when purchasing a product, property, or in this case an RV, which is often a percentage of the total cost. It serves as a commitment by the buyer and reduces the amount financed through a loan. A larger down payment typically leads to lower monthly loan payments. The next term is loan amount, which is also referred to as the principal. This is the RV purchase price minus the down payment. The loan amount is the sum of money that a borrower will receive from the lender, which will then, in this case, go straight to the dealer, to cover the amount of money that is still owed on the RV. This amount will be repaid, usually with interest, to the lender over a specified period of time according to the terms and conditions of the loan agreement. And next up is loan term, which refers to the duration over which a borrower agrees to repay a loan. It is defined by a specific number of months or years as outlined in the loan agreement. The loan term can vary, with shorter terms often resulting in higher monthly payments and longer terms offering lower monthly payments but potentially higher overall interest costs. Typical RV terms are 10 to 20 years. And the next term is interest rate, which is also referred to as APR. The interest rate is a percentage at which a lender charges a borrower for using borrowed money, typically expressed annually. The interest rate is determined by credit score, debt to income ratio, abbreviated as DTI, and market conditions at the time. Expect RV loan interest rates to be a few points higher than a home or auto loan. And our last term is DTI, which stands for debt to income ratio. This is a financial metric used by lenders to assess a borrower's ability to manage additional debt. It is calculated by dividing a person's total monthly debt payments, which include loans, credit cards, and mortgages, by their gross monthly income. A lower DTI ratio indicates better financial health and loan eligibility. And now that we have the terms out of the way, there are going to be several other factors that you're going to want to consider. Our first other factor is lender choice. Unlike a home loan, where you are expected to shop for a lender to find the best deal, the RV dealer typically has a preferred lender that they will set up for you. This is similar to the process of an auto loan. In our experience, those preferred lenders will usually offer the best terms. However, you always want to do your due diligence on a large financial purchase, so make sure that you do some shopping as well. Our next factor to consider is insurance. Because unlike a home loan, RV insurance is typically not factored into the loan and monthly payments. You will need to provide your lender with proof of insurance within a certain time frame after purchase, but this insurance is going to be paid separately. It works much like an auto loan would. You arrange the payment with your insurance provider to occur either once a year or monthly. And moving on, once you agree upon loan terms, the dealer will try and sell you additional packages. These packages, should you choose to purchase them, will be included in your loan and will increase your monthly payment and your loan amount. Some examples of these packages that we've seen are tire packages, fabric packages, and paint packages. Another common package is gap coverage, and some other things that we've seen are extended warranties. These add-ons are optional and can be a good thing depending on your certain situation. A final factor that you're definitely going to want to consider before purchasing an RV is that most RVs are depreciating assets. This means that they will lose their value over time. They are similar to cars in this sense. Just keep in mind that if you're going to be selling this RV in a year or two, that it'll definitely be worth less money than which you purchased it for initially. All right, and the next thing that we're going to do is we're going to run you guys through a sample of our Interstate Explorers RV loan calculator. Don't worry if numbers aren't quite your thing. This calculator is pretty simple. You just have to input a few things, and then you just have to read the results after that. Now, before we move forward, I need to really emphasize to everybody that this calculator is an estimator and is for entertainment purposes only. Please consult a financial expert for proper assistance. All right, so let's get into the calculator. The first thing we're going to input is the RV price. And this is the agreed upon sale price between you, the buyer, and the dealer. Now, we're going to keep our numbers nice and round, and they might not be necessarily the most realistic numbers that you're going to experience, but we're just going to keep the math as simple as we can. So we're going to put $100,000 for the RV price. Now, most RVs cost well under $100,000. So if you're looking to buy an RV and you never purchased one, don't worry. $100,000, it would be a very expensive and nice RV. Most of them go for much cheaper than this. The sales tax is going to vary depending on where you live. Ours is about 8.25%, so we're going to put that in. And the additional costs, we're going to say about $2,000. This is going to vary depending on the type of upgrades you might be doing with your RV, the type of packages that you're going to be getting from the dealer. So we're going to say about $2,000 or so. Moving on to the loan details. The first thing is the down payment, which is the amount of money that you, the buyer, is paying up front. We're going to say $18,000. Now, RV loans tend to be more flexible with down payment percentages, so the typical 20% is usually not always going to be required when purchasing an RV. The interest rate is going to be influenced by a variety of factors. One is going to be the market conditions at the time, and currently at the date of filming this video, which is September 2023, the market is not favorable for low interest rates. So we're going to say our interest rate's about 8%, which, given the market environment and given the fact that it's an RV loan, 8% is actually pretty good because, remember, RV interest rates are higher than car and home interest rates. The final thing we're going to put in is our loan term, which we're going to say is 20 years. RV loan terms are going to vary based on the type of RV you're purchasing. $100,000 is going to be a pretty large and expensive RV, and they're typically going to give you a longer loan term for an RV of that size. Okay, and the next thing that we're going to talk about are trade-in details. Typically, if you have an old RV, you can wrap the sale of that into the loan of your new RV. So we're going to assume that we have that. The old RV that we have is going to be worth $15,000. However, remember that I said that RVs are depreciating assets, meaning they're going to lose value over time. So unfortunately, we owe $20,000 on this RV, which means we have a negative balance or negative equity of $5,000 because we owe 20. They'll give us 15 for it, so we still have to make up the difference of 5,000. And the final thing on this sheet are going to be just some of our goals. We're going to say that our goal for down payment is $20,000. We don't want to go over that goal. And our goal monthly payment is $800, and we want to try and get our payment underneath that. So if we go to the results tab, then this has calculated all the numbers for us. So let's start with purchase price. So the purchase price is the agreed upon RV price plus the taxes and the additional costs. So this is going to get us a grand total of $110,250. We have a negative trade-in equity, which is of negative $5,000, which, remember, is the amount left over after the old RV is paid off. So what's going to happen is that they're going to wrap that negative $5,000. They're going to add that to our RV price of $100,000. They're going to add the sales tax. They're going to add the extra costs. They're going to take that big number. They're going to subtract it by $18,000. And they're going to come up with the loan amount, which is also referred to as the principal. So that's going to get us $96,837.50, which this is the total amount that's going to be financed by the lender. Our down payment, we've already said, is $18,000, and our monthly payment, then based off of our loan amount and our loan term and our interest rate, is going to come out to $809.99. We're going to be paying $8,250 to sales tax, and the total interest paid over the life of the loan will be $97,559.54. Now, down here, this has our goals, which is just the same as the sheet before, just reminding us that our down payment is $20,000. Our monthly payment goal is $800 to get it less than that, and this is just slightly over, which is why it's highlighted in red. So what we've done is we've made a third tab, which is ways to lower your monthly payments. So let's talk about this tab. At the top, we have our current monthly payment, which is $809.99, and we have our target of $800. And then we have some other factors here. This is the price of the RV, this is the loan amount, this is your current interest rate, and your loan term in years. There's basically 4 ways to lower your monthly payment. The first way is to put more money down. The second way is to increase the term of your loan. The next way is to lower your interest rate. And the final way is to lower your purchase price. So if we put down a total of $19,194.07 for our down payment, that would lower our monthly payment to our goal of $800. You could increase your loan term as well. Currently, we're at 20 years on our loan, and if we added 0.63 years, so just a little bit over half a year, then we could also get our monthly payment down to $800. This one, based off this current condition, is unlikely to happen because I doubt they'll go over 20 years, and they certainly probably won't go to 20.63 years. That would be a little bit strange, but the next one is lowered interest rate. We're currently at 8%, and if we can somehow get this interest rate lower to 7.83%, then without putting more money down or without increasing the term of the loan, then that would get us down to our target monthly payment of $800. And the final thing that you could do is you could ask to have a lowered purchase price. If we can get that shaved off by $1,194.07, and if we can get the purchase price to this amount, $114.55.93, then that would get us to $800 as well. So this calculator, like I said, it's an estimator. It's for entertainment purposes only. You can play around with some numbers, you can check the results, and then you can use this lower monthly payment tab to see how far off you are from your goals of your monthly payment.
And now, as promised, we're going to talk about some ways to lower your monthly payment on your loan. Some of these you're going to find are going to cost you some money, and some of these are actually going to not cost you money. They're just going to be a little bit of negotiation with the dealer. So the first way that you can lower your monthly payment, and this is probably the simplest and most straightforward way, but it's going to be the most expensive way, is to put more money down. By putting more money down, you lower the amount of money that you're going to be loaning from the bank or from the lender, and therefore your monthly payment's going to be lower. This is the easiest, most straightforward way, however, it will cost you money. The second way that you can lower your RV loan is by seeing if you can extend the term length. The longer your term length, the lower your monthly payment. However, now you're paying this loan for longer and potentially higher interest costs. And a third way that you can lower your monthly payment is to see if you can get a lower interest rate. This is going to be a good option because it's not going to cost you any more money and it's not going to extend the term of your loan. However, it's going to require a little bit of work on your end. Some things you're going to want to do are to see if you can improve your credit score by paying off any unpaid debt. And another thing that you can do is you can shop lenders, and you can get a bunch of different lenders to give you quotes and rates, and you may find that some give you lower interest rates. And the final way to lower your monthly payment is to see if you can negotiate a lower purchase price. The good thing about this is it's not going to cost you any more money, it's not going to extend the term of your loan, and it's not really going to require that much work on your end. In our experience when purchasing the RVs is that we do a lot of back and forth with the dealer, and ultimately it gets to a point where the dealer says, all right, what's your goal monthly payment? What are you trying to get to? And we give them our number. They go away, they talk with finance for a little bit, they come back and they say, all right, we've found a way to make this work. And what they do is they lower the purchase price of the RV. This may be a great option for you if you're comfortable with negotiating purchase price. Now, thank you for watching this video. If you got anything out of it, consider liking and subscribing for more content. And whenever we're talking about money, it's always a polarizing subject, so I'm interested to see what your opinions are on this, so throw some comments down below. And also, please remember we are not financial experts, and when making a large purchase, you want to consult a financial advisor and a trained professional. Until next time, keep exploring.